Hi there. When you look at the Walgreens Boots alliances, you might say that this company is undervalued, as the stock price has declined by over 43% year to date. And if you look at a longer period, let's say 5 years, the stock price is down over 60%. Of course, if you look at the whole picture, you can see that the stock price have done nothing in the last 20 years. On the contrary, a decline over 17%. And this is quite bad for shareholders. But maybe now, the stock price is an opportunity. Because if you look at the analyst estimates, you can see that the revenue is expected to grow more in the future. The earnings are expected to decline for 2024 to report a higher loss than the previous year, 2023, when they reported a decline over 3 billion in their earnings. And also their free cash flow has been affected. Now, as I said, when you see this massive decline, especially from its highest peak from 2015 to today, the stock price went down over or almost 80%. And this is quite bad. So you might say now that this company is undervalued at the current level, $17 per share. And you might be right. If this company can turn its business around, improve its operations, and of course, to deliver higher earnings in the future. If that happens, then this company is quite undervalued at the current level. Now, if you look at the analyst estimates, what they expect for Walgreens Boots alliances, you can see that for 2024, the analysts expect a higher decline in their earnings, but then a rebound. Now, if you want to try to value this business based on the analyst estimates, you may be surprised that this company is not that undervalued. Let's look at the great scenario, for instance. The fair value per share may be about $18 or almost $19. And now the stock price is about $17. So based on the analyst estimates, especially the earnings, what they expect in the future for Walgreens Boots alliances, the stock price is not that undervalued. On the contrary, a little bit overvalued. Now, if you look at the other scenarios, you can see that the fair value is much lower. So if you want to take advantage of this company right now, you might have a double. But be aware that the market, especially the analysts, don't expect a lot of growth from this business. You can see their estimates here, especially their earnings. Of course, if Walgreens can deliver higher earnings in the future, let's say they may deliver over 4 billion in earnings, as it happened in 2022 or 2019, then the value will be much higher than the current level of 15 billion. The market cap can go to 40 billion. If Walgreens delivers about 4 billion in earnings, only if. But it's up to you if you want to trust the analyst estimates or make your own estimates. If you look at this business, you can also see that the dividends per share are expected to decrease in 2024. By the way, for 2024, the decline might be much higher. They reported 25 cents per quarter, the last dividend, and the annual dividend may be about $1. So the decline may be about 50% in their dividend. And you have to be aware of that. Now, if Walgreens doesn't succeed this year to improve its operations and also next year, then they may cut the dividend. And if that happens, you have to be aware that the stock price will decline even more from the current level of $17 per share. So you also have to be aware of this risk. If they reduce again the dividend or cut it all, then you'll have another decline in the stock price. And as you can see, for the next years, the dividend is expected to decrease. So this might be a problem, especially if Walgreens doesn't improve their operations. Now, the good side, the reward, is that the chairman owns about 17% of common shares. This is good, but you also have to look at the characteristics of this business. Because This pharmacy, I mean all US pharmacy, depend on others, especially drug manufacturers, pharmacy benefit manager, and health plans or insurance companies. And you have to know that they price the drugs according to those stakeholders. They can price the drugs as they want. There are some regulations. That's why I said that the risk is about regulation, especially reimbursement rates. They can charge citizens, I mean their clients, high prices. They can do that. They are forced to keep their margins low, I mean their markups. They can buy from drug manufacturers at a low price, let's say $1, and then to sell that drug with $10. They can do that. They are forced by pharmacy benefit manager, health plans, and of course regulations to have low margins. Let's say they buy with $1 and are able to sell that product with $1.10. Maybe this is a good scenario, but sometimes they reduce the prices even more because, as I said, they depend on others, pharmacy benefit managers, drug manufacturers, and of course regulations. New rules may occur that can affect or put pressure on their margins, their profit margins, and you have to be aware of this risk. A US pharmacy is not like a simple retailer. They find some suppliers and then they can sell those products at a higher price. But here they can do that so easily. They are forced by regulations and other stakeholders to keep their prices low. And that's why this business is quite tricky. Their earnings may improve in the future, there is no doubt, but the most important thing is how much money they can make. Because if their earnings are about 2 billion for the next 5 years, then the final fair value based on these estimates, especially analyst estimates, won't be that high. As you can see, the fair value per share in the normal case is expected to be about $15. If, only if, Walgreens delivers 2 billion in earnings. So at the current level, your return may be between 8 and 10%. If you are pleased with that return, then you can take advantage and invest in this company. But if you want more, then search for better investment ideas. That's why if you believe this company can rebound its earnings, let's say they deliver more than 4 billion, then at the current level, you can easily have a double. But if you take into account the risk and you also look at the analyst estimates, what they expect about this business, and look especially at the other stakeholders, pharmacy benefit managers, drug manufacturers, health plans, and others, and of course regulation, because other laws may occur in the future and can affect the profit margins of pharmacies, especially Walgreens Boots Alliances. So when you look at the stock price, as I said, you might say that this company is quite undervalued. But when you look at the risk, the reward may not be that high. That's why you have to be aware of the upside and the downside. Of course, from the current level, the stock price may double if their earnings improve. But always focus on the risk. Don't look only at the reward. So that's it for this video. And if you have other questions about this company or other companies, please let me know in the comments.